Hi guys, this is Jimmy. We have an honorable guest here, John from SMARDEX. We're gonna talk about passive income. We're gonna talk about DeFi. We're gonna talk about impermanent loss. We're gonna talk about why SMARDEX is so special. Hang on and see you guys in 30 seconds.
Trade limitless on HMX, the next gen decentralized perpetual exchange. Trade crypto, FX, commodities with up to 1000x leverage on the Arbitrum network. Benefit from low fees, multi asset collateral support, and cross margin flexibility. Check them out.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
Welcome, everyone. This is Jimmy. We have an honorable guest. Probably you know him from the previous show. Hey, John. This is John from SMARDEX. I don't think he needs a introduction, as you guys already know him. Hey, John, how are you doing, mate?
Doing great. Thank you. I hope you're doing as well as I do.
Yeah, yeah, I'm doing great as well. By the way, a really beautiful background you have there. Smartens prepare for glory, and I know you guys have been preparing for a lot of glory already this year. I've been following you guys for a long time, and I'm using the platform, the app myself. I've seen all these milestones. I know that you guys are really glorious with the platform, nailing like one milestone after the other milestone. But there are some people, they are pretty new here. Maybe it would be a good idea to give a really like brief introduction about you, Jean, and also about SMARDEX and why SMARDEX is so special.
Yeah. So I rather introduce the whole concept and the idea and the team, because of course SMARTEX is not only about me, as you know, and the goal is actually to create an ecosystem. So first, let me introduce the team. We started in 2019 with a few ideas, actually. And the first ideas we had nothing to do with SMARTEX, to be honest, like with the actual project. We had different concepts that we wanted to create and implement, and unfortunately or fortunately, other guys had the same ideas as we had and were faster than us. And so the whole idea was not to do the same thing as someone else, right? And we were working on different directions at the same time, let's say. And when we had like a few ideas that were really, let's say, innovative and really for which I can say we have proof of concepts, we started prioritizing, right? What can we do first? How much time will it take to implement and create, and how fast we can deliver it securely and everything, right?
Yeah.
And on all of these ideas, the faster one was, let's say, the exchange slash swap part of SMARTEX, because what most people fail to realize is that SMARTEX is not only a DEX. I know there is the word DEX in SMARTEX, and people see DEXs as mostly swapping. But if you go on an exchange, right? If you go on Binance, for example, or any, let's say, big exchange, you have way more than just swapping, right? You have leverage, you have borrowing, lending, you have stacking, you have different protocols you can participate in, you have derivatives, you have many kind of things, right? You have, even some of them have their own stable coins, you have a lot of things. And there are exchanges, right? And SMARTEX aims to be a a real exchange, right? As we said in the AMA we done months ago, just after the launch, we are not really going for the decentralized exchange market because that's of course part of our ambition, but it's not exactly only our ambition. Our ambition is to really create an ecosystem where everything DeFi can be done in one place, right? And everything today works pretty good, but not exactly. So you have this kind of weird DeFi world where you have one protocol for one thing and the other one for one thing and the other one for one thing, and all of them don't work exactly perfectly, but well enough. And they don't interact exactly well together, but well enough, right? And it's like you need to connect everything and do the work to have things that work and together and work individually, right? And our goal is like to remove all of it. Some people like to compare our idea with like what you have, for example, in companies like Apple, where you
Hmm.
create a system where everything connects together, right? So we can hate Apple for many reasons. For example, I'm not an Apple user. Sorry, guys, but
Hmm.
I must recognize that it's very convenient to be able to airdrop things from a computer to your Apple TV and be able to broadcast your screen in one click and never have to think about compatibility and never have to think about operability and things like that, interoperability and things like that, right? And we want to create the same thing. We want to have um, that idea. So to end the introduction, we are a project, a team that aims to create a new ecosystem where you can have anything finance, but decentralized and working well, right? And the first real milestone or step was to show like that we have the capacity to do it and create a new product that works well, and and have a way to gain trust from the community, build the communities, show them, see, now we have this thing, it works well, the promise is there, and we accomplished what we said we would, and now we will have to we will need you guys to be a little patient because there are a lot of stones that will be added to the building, right? And we are working hard in the background, and we just published an hour ago the team page, so people can actually now have some faces for SMARDEX, and and yeah, the rest is gonna be interesting, I guess.
Yeah, for sure. Are they all as pretty as you, Jean? I mean, the team.
I don't know.
Well, I've seen the team.
I don't think I'm especially pretty, but I do my best.
Yeah, I've seen the team. Beautiful people, but also really smart people. I can see, like, from a quick glance, that you guys have been really selective with selecting people and to let them entering the SmartX team. Guys, if you're a little bit patient, we're gonna go through some website. We also gonna go through SmartX webpage, the team, but also where you can farm and how I make passive income on SmartX. I think I'm now sitting around 10k, 11k on passive income just by pooling some SmartX tokens and Ethereum. Both of them have been, going up since I pooled money in those pools. I think I started somewhere in June, so I think that was also like one of the better times to try out new things. And I think it's still now the time to try out new things. What I've learned from my own experience, and this is actually a message to everyone who's listening to this live stream or later to the recording, when you want to make it in crypto, there are actually a few things you want to do, and this is one of the few things you want to do. One, try to be a little bit different from the crowd, and secondly, try out new protocols. I mean, I would never earn all these airdrops back in 2021 if I haven't tried like new protocols. And the same goes with all these protocols. If you want to really understand the power of a protocol and what it does, and what it can do and its potential, just try it out. And this is maybe also one of the reasons some of you guys should try out SmartX. Just swap it, just pull some money. You can start with. Is there, by the way, the minimum? I haven't checked that with pooling money.
No, there is no minimum. You can do it with
Well,
10 cents. I don't know if it's very worth it, but
well, from an experience point of view, maybe it's worth it to just do it like one with
sure.
$1 to learn something, right? And to get confidence in it. I can recall, Jean, when I just started with crypto. I was really paranoid when it comes to sending funds from one wallet to another wallet. So I always start like with 1 cent, and then again, and then again, and then okay. And I thought, okay, this is the right wallet. So I'm gonna transfer
Yeah.
everything, because if you transfer like the money to the wrong wallet, everything is gone. And I would say, practicing and trying new things out will create also some sense of trust, which is really important in this crypto space. Jean, one of the few things you guys did was, spreading this, not only the narrative, but it was also like a real fact is SmartEX is actually really different from Uniswap or Sushi, 1inch, because the way how SmartEX deals with impermanent loss is way different than with Sushi Swap, 1inch, and all these other how can I call them, like one first generation DEX'S.
Mhm.
Would you say that this is like the buildings, so like the core, the core of SmartEX, the way how you guys address impermanent loss?
Yeah, I'd say we have a very good advantage at SmartEX is that Eric and I have a lot of experience in market making, right? And we've been market making for years, and we understand everything around liquidity providing and everything, right? And what are the trade-offs and how to trade and how to manage it and how to let's say avoid impermanent loss and things like that. And basically, a huge mistake that first generation DEXs did is to only think about the people that swap tokens, right? So it's really cool to only think about one side of the transaction, but if you try to sell a product in a shop and you only think about the client, you will have like a very cheap, huge quality product, but you have zero margin and you get out of business pretty soon, right? So it's really cool to only think about the client, but if you don't think about the other side of the deal, you get basically no deal at all, because nobody can provide the deal anymore, and so if there is nobody to provide the deal, there is no client, right?
Yeah.
And
So
yeah, what the problem with first generations AMM is that they only favored people that swap, right? So one thing you will hear about SmartEX by the critics often is, yeah, but for big trades, you guys have a big price impact, right? And I'm like, yeah, of course. Yeah, that's the point, right? At some point, if there is a big arbitrage opportunity, SmartEX will decide to protect the LPs, right? And that's the whole point. And some people will say, yeah, but I will have better prices on Uniswap. Yeah, but be my guest, go on Uniswap by all means. I mean, if you want the best price at all times, go on Uniswap, right? But the problem is that if you keep doing that, liquidity providers get killed over time, and at some point, DeFi stop to exist, right? So what we are implementing, for example, is a point of equilibrium. So it doesn't mean that on SmartEX you don't have the best prices. You will always have the best prices up to a given size of trade. And that's how it works on every centralized exchange. So if you come with $1 billion on Binance and you want to buy $1 billion of Bitcoin, you will probably buy your $1 billion worth of Bitcoin now on Binance at an average price of maybe $80,000 per Bitcoin, right? Why? It's priced at 37 right now, right? But there is not enough liquidity, right? So since the market depth is not big enough, you will empty the order book and get a very bad execution, right? But it's not a bad thing. It just means that you have to go slowly, take your time, because market makers are not dumb. If you are willing to buy $1 billion worth of Bitcoin in 1 second, they will sell it at whatever price you're ready to pay, right?
Mm.
And when they will see your order come in the market, what they will do is they will remove liquidity from the market and add orders very high, far from the price, so that you get executed at the worst price so they can make money, right? And that's the only reason centralized exchanges are way more liquid than decentralized exchanges, because market makers and liquidity provider, they don't want AMMs because they get wrecked. Because when a guy comes and sells and wants to buy a big chunk of token, of a given token, they have absolutely no control whatsoever on the price they sell this asset, right? And they will have a huge impermanent loss, because then the price of the asset goes up and they sold it at a suboptimal price.
Mm.
And to come back to your question, that was the context to understand. Uniswap and other first generation DEXs, they only thought about the swappers, right? They said, we will give them the best price at any time. Even if the price is higher on Binance, the LPs will still get wrecked on Uniswap by arbitrageurs that can just buy the asset on Uniswap and sell it back on Binance and do a profit instantly, right? And as a liquidity provider, why would you provide liquidity on Uniswap if you can just sell it higher on Binance, right? You will just give an opportunity to a guy to buy it until it reaches the Binance price, and then sells it on Binance, and he makes a profit. And who loses the money? You, right? Because you could have been the one to pull out the liquidity and sell it on Uniswap, but you didn't, on Binance, but you didn't, right? And what SMARDEX does is just to rebalance the power. SMARDEX says, okay, having the best price at any time in the market is cool, right? But throwing money out the window for liquidity providers, for people to be able to arbitrage between pools and make profit off of them, it's not cool, right? And there is, they consider like there is this trade-off. Okay, it's fine, we have the best prices and we don't care about liquidity providers. And now everyone is trying to tackle the problem of impermanent loss, right? They created that monster, and then they publish V3 and V4 and they try to fix it. And V3 and V4 actually do way worse than V2, right?
Wow.
Because you concentrate liquidity at the worst possible place, you reduce impermanent loss for some time, and then it goes through and it's 10 times worse, right? And if you go on our page, when you go on the performance and you check the on-chain performance of our pools versus V2 and V3, V2 always outperforms V3 and SMARDEX outperform both, right? And that's very funny because V3, okay. And now then you have the Uniswap founder that publishes a thread on Twitter saying, yeah, finally, impermanent loss is a feature, not a bug, right? Very funny. We tried to fix it. We didn't manage to. So now we will pretend it's normal to have it, right? And that's really bad, right? And we really believe that at some point, everyone will migrate to other DEXs that manage liquidity better. SMARDEX is one solution. I've seen many other solutions. They have all their trade-offs. I think SMARDEX is by far the best one. The other one's exposed to extra risks. But basically, I don't think that V2 and other first-generation DEXs will still be used in like 2 years from now, right?
Yeah. You actually really made a good point. Like Uniswap, nice place for swapping, right? But it's not really good place for LPs, for liquidity providers. Well, where a platform like SMARDEX is actually way friendly for liquidity providers. The fact that it's like double audited, it's backed up by a big community, it works, it's sustainable. This brings me to like a different concept which we often see in AMM DEXs, and that's the sustainability. Yeah, that was a tongue twister.
Sometimes there is a word that doesn't want to come out. It's fine. Just keep it.
Yeah, that was a tongue twister. Thank you for helping me out. So how could a DEX help with remaining sustainable?
Yeah, you mean the sustainability of the DEX, right?
Yes.
Yeah, well, I guess the more liquidity providers will join, the better they will notice. Maybe this will do a bridge on a future question, but I can already touch on that. Uh,
Uh-huh.
we have partners and more projects contacting us saying, "Oh, we want to provide liquidity on your DEX because we are getting wrecked on Uniswap." Imagine you have a new project, you invest time in it, you develop it. It takes time and finance and energy and everything, and then you create your token and you get wrecked by selling it at the worst possible price by impermanent loss on Uniswap, right?
Yeah.
Why wouldn't you come to SmartEx and have this possibility to optimize the price of your token, right? So first there's that, and secondly I would say we spoke about how at some point SmartEx decides by the algorithm to protect the LPs for big trades. It also means that if, for example, today we are integrated by OneInch, we are integrated by OpenOcean, integrated by Odos. By the way, it's a scoop. They just integrated us a few hours ago. I didn't announce it on Twitter yet. We are integrated by other aggregators soon. I cannot give their names, but people can figure out. And pretty soon we are integrated by every kind of aggregators, right? So you will have this market where people use aggregators, and up to the point where SmartEx is cheaper than elsewhere because we have lower fees, they will take that route through our pools. And then for the rest of it, when SmartEx says, oh, now we try to protect the LPs, we will increase the price impact up to that point. They will go elsewhere, right? And they will have the perfect execution, right? And soon enough, what people will realize, we already spoke about it last time you and I spoke live, but soon enough, you will have on SmartEx an integrated way of trading at always the best price. So the SmartEx website itself will decide what to route through the SmartEx pools, what to route elsewhere, how, where, at what cost, and always give you the best price of the market. And no matter what token you want to trade, no matter how liquid it is, you will not find a better price elsewhere. Or if you do, it will be by maybe a few cents because of different kind of algorithms in that very moment. But it will basically have the best price of the market equalized, right? So it's very important to understand that when I say SmartEx rebalances the power between LPs and swappers, doesn't mean that swappers are not welcome on SmartEx. By the opposite, they will have the best prices on SmartEx. But at least while they swap, they won't be like stealing money from the poor LPs that want to
Mm.
make a living off of it and are
Yeah.
getting like poorer, right? And I see when you go on some pools, because now we implemented a new option on our website where we go on liquidity and you try to provide liquidity, you can see the performance of SmartEx versus Uniswap, for example, for that given pool. And on a few of them, you can see huge impermanent gain. On some of them, you can see on most of them, you can see neutral or slight impermanent gain or slight impermanent loss. And on Uniswap, it's always like very bad impermanent loss, right? And you're like, why would I provide liquidity elsewhere? It doesn't make real sense, right? So that's how you get sustainable. It's by having the best product, taking care of your LPs, and the more liquidity will join, the more volume will join. We have a nice uptrend of volume, and it keeps growing. It's still low compared to competition, but we are just a very young DEX. And the more volume, the more TVL, the more TVL, the more volume, and it will keep going like that. And with the new updates we will present next year, I'm very sure that TVL and volume will go go up very fast and very strongly, let's say.
We're looking forward to that. Ladies and gentlemen, you guys noticed how passionate Sean is talking about SmartEx. Give him a like, give him a big shout out, and let also know in the comments if you're enjoying this live stream right now. There are a few questions, Jan, from a few people. Do you mind to take some of these questions?
Sure, go ahead.
Here, this is actually an interesting question of Erica. She says, right now staking is only available on Ethereum. Is there a plan to implement staking on other chains as well, like BNB, Arbitrum based Polygon?
So the answer is no, for several reasons. First, the SDEX token for now is just a passive income token, right? So you stake it, you get a part of the volume redirected to you, and you get a nice return, and you're happy, right? But in the future, it will become a governance token, right? And the governance token will allow you, basically, once every piece is assembled in this ecosystem, will allow the users to decide of the future of SMARDEX, right? The goal is to achieve a real decentralization. And to be clear, the layer 2s or BNB and other chains are far from being as decentralized as Ethereum, right,
true.
today. And if we really want to, and we could even argue that Ethereum is far from being as decentralized as Bitcoin, right? So it's already a trade-off to build on Ethereum, because you sacrifice part of this decentralization of Bitcoin for convenience, right? And it's our goal is to remain in that DeFi narrative, right? We don't want to sacrifice decentralization more. So the governance token has to remain on Ethereum, and the let's say the layer 1, the foundation of SMARDEX, will remain on Ethereum, because today it's the strongest, more decentralized altcoin, right, and ecosystem, right? So stacking will remain there, because at some point it will become a decentralized autonomous governance mechanism, and this has to remain on Ethereum. Now, on ETH, you get a part of the fees that are collected by the volume of SMARDEX, but you also get a second mechanism that's burns. So on every other chains, instead of being by holding your SDEX token, instead of earning money through stacking, you get it through burning mechanisms, right? So SMARDEX, to be perfectly accurate, is disinflationary, right? Not deflationary, because there is an inflation for 10 years for distribution of the remaining tokens, right? It's a little less than 30% that remain to be distributed over 10 years, so it's very reasonable. And you have a burning mechanism at the same time, right? That counters this effect, right? So it's disinflationary, right? And so if you hold SDEX token on L2s, you get paid because they take they accrue value by burning and reducing supply. And if you are staking, you have a double effect. You have this burning mechanism, and you have the APR by staking, right? So if you only plan to hold SDEX, I would say you always have an advantage to do it on Ethereum, because you can stake it, right?
Yeah, Erica, I'm sure this has answered your question. This was a really detailed reply on your question. Hope you learned some few things here. We have another question from Gaz, and I think this is a quite interesting question. What would you say is your top 5 competitors? Well, maybe not top 5, but you could also mention like 1 or 2, or none if there aren't.
Yeah. I would say our top 1 competitor, even if this is I don't see it as competition, but de facto it is. I would say is Binance, right? Because we are not, again, being competitors to DeFi is like saying, you have the best product. It's like, I'm not saying, I will try not to sound too presumptuous, but it's like you're Messi, right? And we say, who's your first competitor? And instead of saying Ronaldo, which by far is the competitor, we know it, and there is a huge debate that will never end around that. You say like it's it's that's player from this club that everyone knows, but it's not in the GOAT discussion, right? It's cool, but it's not real, right? And for us, we see it like that. When you see the plans we have and how innovative we will be on several directions, it makes no sense to say we are in competition with Uniswap, for example, right?
Mm, mm.
The small part of SMARDEX that is swap related and liquidity providing related is in competition with Uniswap, and the other part that we will come up with in spring 24 is going to be in competition with that other guy, and the other part will be that, right, and we will add this rocks to the building, right, these bricks to the building, and all of them they will build something way bigger than Uniswap, way bigger than all of these things. And the only competitors we have that can achieve that kind of offers right now are competitors like Binance and others, right? So I would say the biggest centralized exchanges are our real competitors.
It makes totally sense. I hope this has answered your question, Cass. We have another question from Tiago Friedeboms. Sorry if I pronounced your name not correctly. Perhaps this is a little bit complex question, but how can you explain how impermanent loss would work? Example, USDT and Ethereum. How would the provided balances would behave as priced if Ethereum fluctuates higher and lower?
So the question is a bit weird, but I think I guess I understand the essence of it. Um, so impermanent loss, I will do it a very short explanation. Impermanent loss is basically you provide two assets, and I'm talking about it on Uniswap V2, for example, right? You provide two assets. One of them goes up in price regarding based on its value ratio to the other one. So, for example, let's say you have USDT and ETH, and USDT remains at one USDT and ETH doubles in price. Then people will be able to come in the pool and take ETH out of this pool, and the pool will keep pricing the ETH higher until it doubles in price, right? And for every ETH you sold during this up move, you basically lost money because ETH is already double the price on Binance, for example, right? But on your pool, it remains low, right? And the only mechanism by which the price will join the Binance price is by people basically stealing your ETH for free because it's easy to sell at a higher price in the other side,
Yeah.
up until the ETH price matches Binance price, right? So they basically have it's like you have a merchant in a street that buys your eggs for $1 each egg, and you have another guy here at the right that sells eggs for 50 cents, right? So you can just buy his eggs until he realizes that they are worth $1 just 5 meters away, and they rejoin the price, right? But the only way for him to make the price go to $1 is to sell these eggs as much as he can, and up until the price matches $1, right? Well, on SmartX, if you start buying a lot of eggs to this guy, as soon as you start buying a lot of eggs, he will say, "Whoa, whoa, whoa, wait, something's going on, right? I will start increasing the price of the egg faster because probably there is somewhere someone that can buy these eggs at $1, and that's why everyone is buying them, right?" And he will keep doing that until things calm down. And when things calm down, he will again start stabilizing the price, right? And it's just that. So at the end, when you bought these eggs to this smart guy, as opposed to the dumb guy from before, this guy sold less eggs before you reach the same price as the other merchant. So that's the impermanent gain he did, right? He has more eggs to hold, and therefore he made a profit compared to the other guy that sold a lot of eggs. That's basically it.
Tiago, don't sell your eggs too cheap, please. Maybe we're going to run some simulation. There's a beautiful simulation on the SMARDEX website. This maybe answers also your question. I hope this helped, Tiago. There was one question. What was it again? Yeah, this is another brilliant question from Erica. Can you please explain how the community rewards contracts work?
Yeah, sure. So SMARDEX, as we said from day one, has a distribution schedule for 10 years, right? And this distribution mostly happens through the farming campaigns, right? So if you want to get SMARDEX, the equivalent of mining Bitcoin and securing the protocol is to provide liquidity and make the protocol work, right? And the protocol will reward you with this SDEX that you receive in exchange. And basically, the APR is provided by the market because the market prices this SDEX that you receive. So sometimes I see comments on Twitter like, it's a Ponzi, where this APR come from. It's impossible to have 40% APR on ETH SDEX. What the fuck? Another scam. Luna. All of these things, right? Luna 2.0, and they don't understand that there are actually people buying your SDEX that you receive, right? So
Yeah.
if these people buy your SDEX, they define a price for this SDEX, and therefore these rewards are priced in this price, and you can calculate an APR, right? So it's not a Ponzi. We are not creating wealth from nowhere. We are just giving you rewards, and when I say we, it's the protocol, of course. We are just giving you rewards, and the market is ready to pay for this reward. So this is where the APR comes from, right? Now, as I said, this part of the DEX is only the first part, right? And we have many other coming, so it will take time, and it will probably go at the rhythm of one every few X amount of months from now. As you know, we take security and other things very seriously, so we will do everything to make sure it's perfectly secure before we plug it in, right? But we have to also incentivize these new users for these new mechanisms that will come later to join, right? So we have these rewards for the liquidity providers, but we need rewards for the other users. I won't tell you exactly what they will do, but they will do things, right? And so the community rewards are just a contract. We don't have any access on these funds. They are locked on that contract. So we could change the target of this reward. We could do many different things. But the point is, this contract are saved for the community on a contract, right? And they are just saved for later, right? It's just that. So this money is not for us, it's not for the LPs, it's not for anyone right now. It's just being saved to start being distributed for the new functions, new features that will start to have to appear on the SMARDEX ecosystem, right? And basically that's it. So people will be able to unlock these community rewards later. They will be distributed to the community. That's why they are called community rewards. But the goal is, of course, to encourage adoption, right? And one of the ways we have to encourage adoption is to reward people that use the protocol, right? So they are just that.
Yeah. Thank you. That was an inspirational response. Thank you so much, Sean. Erica, I'm very sure this really has answered your question. And I'm seeing also a lot of replies from our friend Warrior. John inspires. I feel his vision. I share the same idea. I just, I feel that vision. Jean, I maybe have a question, maybe a little bit a tricky question about like APRs when they go, when they're high and they go lower. I have like a vision on that, and my vision is if a project, crypto company or a DEX is really good, and they lower the APR over time, my belief is this is more a bullish thing overall. From an investor point of view than a bearish thing, because the selling pressure also decreases. Do you have any thoughts about that, or do you feel inspired to touch base on it?
So the rewards, the APRs will split year over year for 10 years, right? Until we distributed all the SDEX. So of course the APRs will split over time, that's for sure, and the selling pressure also. But one thing you have to keep in mind is that since price of the SDEX keeps going up, even when rewards absolute SDEX distributions remain the same, and so there is more liquidity, so APRs should go lower. Since SDEX keep gaining in price, then the rewards stay up, right? And so people are
Yeah,
like, oh, but why don't you reduce the reward? Well, we don't decide. It's a decentralized protocol, right?
yeah,
If the market wants to pay you to provide liquidity and have great rewards and APRs, let the market do what he does, right? The
yeah,
market is efficient, and I believe in efficiency of the market. Sometimes it can be irrational, sometimes it can be wrong, but I believe that over time it's always right, and that's very important, right? So I'm not trying to reduce the APRs and try to do anything. Um, and I don't think it's our role to decide that. But there is a schedule, and the APRs will decrease over time by many different reasons. One of them being increased liquidity, but the other one, of course, being distribution and the fact that we have like these halvings every year.
yeah.
So yeah, that will be a natural mechanism. But I agree, too high APRs. So if you look at some projects of the last DeFi bull run 2 years ago, some of them had crazy huge APRs because
Yeah.
their tokens were immensely overpriced, and they distributed a lot of tokens. Then of course APRs crashed because tokens were useless, and anything, nothing was making sense anymore for the project. And now these tokens are like the let's say the core of their protocol, but they don't have any token left because most of them hold them on wallets that are dead and they are not used anymore. So governance is almost paralyzed because nobody gives a damn about the project anymore and things like that, right? So
Yeah, true.
we don't want to be this project, right? We want to have a fair distribution of a long period of time. We feel like 10 years is very good, and it's a good compromise with price going up and stabilizing and APRs. And as we can see, for now, it works very well.
Yeah, indeed. It's also part of the, of being of staying sustainable over time. I'm happy actually to share my screen, so we can walk a little bit through SmartEX. Maybe it's even like a good idea if I maximize my screen. So Jean and I, we're out of the picture, but you guys can still hear us. Um, so this is a basic. Let's start with the team. So this is the team.
Mhm.
I would say to those who don't know the team yet, if you're on LinkedIn, just, find them, add them on LinkedIn, make friends with them. Maybe they're gonna share some alpha there as well. Not sure how active you guys are on LinkedIn. So I'm myself. I'm a genuine user and a happy user of SmartEX. I'm using it since June, I think. When I read the white paper and the documents and how SmartEX tackles the impermanent loss, I understand it doesn't 100% like solve, or mitigates every impermanent loss, but the impermanent loss is way, way lower. We can run some simulations. So I'm a big fan of the base network.
Quick note: you can go back to the home and you can scroll a bit. You just added
Uh-huh.
also a new section here with the partners. Should be available soon. Maybe you have to do a hard refresh. I don't know, but should be live during the next minutes normally, and you will be able to scroll. Here you can see it.
Aha.
And
Here, partners
this list
integration.
will keep growing, of course, but that's a quick preview of our ecosystem for now.
Yeah. And also, I only see like really good companies. I know Tactum. I know what they're building. I know RVF invested
Mhm,
in
mhm.
themselves. I know Ator. Ator is also one of our partners. Really good team. I also really believe in what they're building, a decentralized, anonymous internet for everyone. So yeah, guys, this is the app. This price, well, probably you don't talk about price. When when I discovered SmartEX, it was way cheaper, of course, and I think it's still undervalued when you look to the total locked total value locked, and the immense potential it has. I myself, I'm a big fan of farming. Not sure about you, John, but I think like the previous bear market was a really comfortable one for me, as I was actually farming basically everywhere, different protocols, staking, which sometimes gives me even like more money than trading alone, which is really comfortable. Of course, so my strategy normally is make profit, and then you have like a hodl back, and then the other, like when you have funds from farming, you can redistribute them again and reinvest them, for example, in whatever you want. Actually, a while ago, I indeed staked like few Ethereum and a bunch of SMARDEX. And the cool thing is, when you do this, for example, on the base network, transaction fees are really cheap. I really hate, to be honest, to do things on the Ethereum network because
Mhm.
everything is so expensive. And sometimes when the network is really busy, then it's paying 50, 60, 70, $90 just for one transaction is sometimes a really hard reality. So my basically my next step for the months forward, I think I'm gonna stake some, convert some SmartX from base to Ethereum and then stake them. But maybe a question for you, maybe also really interesting for our audience: is there any like lock up mechanism when you stake your coins, or you can stake them and the next day you can unstake them again?
You can stake them and unstake them in the same block if you want. We don't care. So most of the lock periods are so. You have to understand one thing. So also that we didn't mention so far is that
Yeah.
we really tried to have the most transparent and fair tokenomics and business model ever created. I have this belief that you cannot be a pioneer if you're not pioneering, pioneering, let's say,
Yeah.
from the first step, right? And that goes through also be a pioneer where you when you create your token, you distribute it and things like that, right? And we wanted to show that we can be fair. Most tokens 99.999% of projects they will have a huge minted amount of tokens for their team and a lot of VCs and founders and private salespeople that have huge bags to ready to dump on retail and things like that, right? And we wanted to have the opposite, right? And the only thing they found to allow their like early holders to dump on retail is to create lockup periods, right? So you stake and you lock for like say a year and you have that APR, but by the time you can unlock it, the price divided by 10 because every VC is out there dumped on you, right? And that's a very problematic approach. And our goal is not to say, okay, staking is like a way to encourage Ponzinomics, right? It's
Mhm.
just a way to earn passive rewards, right? So you stake and you get a part of the the fees and reward for you, and it happens every 12 seconds, and the benefit the profit is immediately reinvested, right? So it compounds. And it's just to say, okay, look, even if in our staking we are there is no more no fairer let's say projects out there, right? So no, there is no lockup, and the goal is to show people that you can actually have adoption and transparency and work without having to create some ponzinomics, as we say, right?
Yeah, and I think that's also the reason why so many people felt inspired to stake their coins. I see on DeFi Llama that more than 73% is actually
Yeah.
staked in that pool. So this is again another, how do you call that, confirmation that there's a lot of trust in the protocol itself.
Yeah.
Uh, would it be like a fun thing, not going through the documents? You guys can do that yourself. I've done it. If you're interested, I definitely highly recommend it to go through the document. It's written in such a way that's really easy to understand. The white paper, not gonna lie, maybe you need to rewrite it one time or two times, but it's really worth it. After reading that white paper, you will understand that there has been a lot of research behind it before they even created
And I see we
uh,
just crossed the 1.5 million burned DEX'S while we were speaking. So you can
wow,
see it here.
congrats,
Yeah.
another milestone.
Yeah.
Really good one. Yeah, hey, let me go through, quickly also to answer Tiago's question and all these other questions. Um,
Yeah,
let's
you
do how to navigate again from here to the stimulation.
you go to performance, yeah.
Yeah, performance.
Yeah, and you have three tools here. So the best one I would say is on-chain comparator on the left, because nobody can accuse us of like forging anything. It's purely on-chain, and we'll get everything from on-chain data. Yeah, sometimes it takes some time to load because it has to go on every chain, get the data, right? So
Oh yeah, yeah.
so now you can click on any of these pools. These have been created
Okay.
on
Let
different
uh,
protocols, and you can see the performance of each pool, right?
yeah. Is there anyone you rather prefer to display to the audience because it's
Any,
easier?
any. You can click
The
any.
first one. The first one.
Yeah. Okay, so here you can see that PNL, you have 53% on SMARDEX. You have 19.29 on Uniswap v2 and 19.31 on Uniswap v3, right? This is just PNL. Now, what is interesting are different things. So as you can see, the very last line, the orange one, because you are the market here, the ILIG is funded by the market, so you have extra rewards and things like that. The market is ready to pay you to provide liquidity. So let's not pay attention to fees, because that doesn't matter. It's extra on top of our tech, right? But if you see here, the very last line, which is the most important one, you have minus 0.26% impermanent loss, right, on ETH WBTC, right? If you go on UniV2, you have almost the double, okay? And if you go on UniV3, you have 3 times more than 4 times what we have, like even seven times, right?
Yeah.
And so that illustrates what I said before, right? When you go on chain, you can see that UniV3 actually that is supposed to allow you to help with impermanent loss is worse, right? And the only way you have to uh, do better than V2 is to actively manage your liquidity and zones, but it's basically you becoming a trader, right? So liquidity provider doesn't want to be a trader and try to optimize things, and it can even be worse if they try to, right? So you can go on any, like, scroll a bit, take another pool,
Yeah.
scroll down, open another one, so you will see just the last line. Okay, so here we have impermanent gain, right? Almost 1% on SMARDEX, almost 1%, 9% ELIG, 5.12% PNL, UniV2. No, and here we are, sorry, here are two UniV3 pools. You have loss on both, and you have impermanent loss on both, right? So in that case, we do better than UniV3 on every single metric. And on ILIG, we do impermanent gain of 1%, almost, and you actually lose money, a 1/4% on V3, and the last one, and minus 0.08% on V3 full range, right? So again, here you have a proof on chain that just providing liquidity on our pool is way better than providing it elsewhere, right? And we won't do that for every pool, but you get the idea, right?
Yeah. Yeah, and yeah, the rest is the others are basically the same. As you can see,
Yeah.
guys, impermanent cost is way
Maybe
lower. And
maybe one last thing, sorry.
yeah,
If you don't mind, if you go on liquidity, you click liquidity on the top. So you get out of this page, you go on the liquidity page. Okay, now click new position. And for example, let's say you put Tectum on in place of ETH. Okay, so yeah, it should maybe you are on the base. You are on the base chain. Maybe you. Sorry, you have to switch network. My bad. Yeah. So go on ETH up. Okay. And now, yeah, now you should be able to find it. Wait before it. Yeah. Okay.
Index.
That. Okay. And now you go. Okay. Let's. Okay. Don't need to do anything else. Look here. Now you are a liquidity provider. Let's say you are Tectum, right? It's your project. Look, you provided liquidity on SmartEx as Tectum. Now you have 0.0025. You have, sorry, you have 0.1.5% impermanent gain on SmartEx, right? And you have minus 0.883% impermanent loss on Uniswap, right? Why would you provide your liquidity on Uniswap as a project, right? You want to have the best out of your token, right? So you can see here that they have this nice outperformance from SmartEx that actually is creating impermanent gain, while Uniswap is taking their money. And if you look at the bottom left, you can see that actually there is a reward for farming, and they
Yeah.
have a nice 38% APR on top of that, right?
On top
So
of that.
it makes no sense to provide liquidity anywhere else, right? For a
Yeah.
project. So that's why a lot of projects are contacting us, right, these days to negotiate different things to start providing liquidity on our DEX, right?
Yeah, it makes totally sense. But even if this impermanent gain was lower, let's say 1% or 0.1%, this farming APR just justifies everything
Of
to
course,
just try out SmartEx. And that's also the reason why I'm farming. Because of the APR, there is maybe like a little bit of impermanent loss. Maybe I think at this moment I don't have even a impermanent loss, but the APR justifies 100% the potential
of
impermanent
course.
loss, and that's how the way how I approached this and how I approach normally passive income strategies. Jean, thank you so much for walking us through the website. Ladies and gentlemen, I'm seeing some comments where to start. Listen, I think one of the things is this: readers are leaders. So go to the website, click on resources, read the documents. It's really easy to read documentation, and join the Telegram group of SmartEx. It's a really supportive group. I'm there as well from time to time, asking their questions, seeing what's going on there. Jean is there also. The community is really supportive. If you have any questions, I'm sure they're gonna answer your questions. It's a zero toxic community, good vibes only. Jean, thank you so much again. Is there anything you want to share with us, like maybe like final words, maybe some advice or recommendations?
Yeah, I would say just uh, keep having fun on DeFi, keep experimenting, keep reading, keep getting informed, because it's a very revolutionary moment, I would say, in the world, and people will realize it only too late. And I would say people have to pay attention at what's going on these days, because many people will miss a lot of things, and in hindsight will say, "Oh, I was there and I didn't do anything," right? So that would be my final word. Just stay in touch with reality, just stay curious and have fun.
That's a really good one. Stay in touch with reality, guys. You have heard it. And follow SmartX. The ticker is of the handle is SmartX. At what was the ticker? Like, it's
At
at smart.
SmartX, you have everything on the homepage of the website. So if you go on smartx.io, you have the social buttons, very easy
Okay,
to
got it.
find.
If you cannot
On the
remember this one, then you should go out of crypto, smartx.io. Go to this
Yeah,
website, follow them, read the documentations. Jean, thank you so much.
thank you very
Audience,
much.
thank you so much for the questions. Again, Jean, thank you so much. And
Thank
till
you.
the next time. Bye bye, guys.
See you. Bye.